Perfect. Someone to go and share the link to Kevin Calvin on Discord. So I'm saying, yes, I'm saying there's a link. Engineer, have your mic muted there. So so I was saying, when you look at the weekly, also from the weekly point of view, number one, we have price trading below this area, and in here we have an imbalance, and we have this structure, and we also have this structure. So we might be anticipating some slight push to the upside before we continue with the drop. So we're going to expect some gain for the dollar for some time before we continue selling. So from the short-term narrative or point of view, remember this week from the fundamentals we have 4MC. We'll be having the other. I don't know if we'll be having also CPI coming soon, and all that. So we need to take note of those economic events. So still on the technical part of it, you see we had this area which is acting as also in pure liquidity. Prices come and tapped on it. The likelihood of probably us pushing up further. Maybe our next target is the 1.500 psychological level, right? So that is from the daily point of view. So which now guides and tells me that we might be continuing. We might continue with the bears taking over for the US dollar quotes, and also bullish movement for the US dollar basis, right? So now let's go to the let me talk about gold, then I'll jump into other currency, or I'll go to other pairs. Now, I think I can just delete everything so that I start over. I'll just do this for the sake of guys to understand where are we heading on gold, what are the possible zones. So number one, when you look at gold very well, from the monthly point of view, we have this major area of liquidity, which has not been tested from the same time frame. Have that major area of liquidity, which has not been tested. So I believe maybe soon we might be going back to the 2,500 levels before we push further. There's a chance of us getting to 4,000 level, even up to 6,000 levels this year. Just take note of that. The chance of us getting to up to 4,000, 6,000 price level for gold. Now, the monthly, you see, these are like how many months? These are like 1, 2, 3, 4, 5. And when we have crazy momentum, we can even have two candlestick pulling back all the way to this zone, maybe get to continue with the uptrend or push to the upside. So when you check on the weekly time frame, the monthly confirms also the weekly area of liquidity. And on the weekly area of liquidity, we have a couple of things. We have liquidity engineering and we have flips. But since we're looking for short-term opportunity, like for this week, and we're having FOMC coming up soon, we need to dwell so much on the daily time frame and weekly. So if you look at these price level, the 31.71, below that zone at around 31.25, we have some nice flip zone on the daily time frame, which will be a very powerful and a strong price point to consider taking some more buys from. So when you go back here, we see, or we term or consider the whole of this zone as an area of liquidity for the daily time frame. But inside this area of liquidity, we can clearly see that we had these failed liquidity engineering, which might be acting as one of the most strongest or powerful area to buy from, because we always say that the failed bullish setup is the best bearish setup, and vice versa. All right. I hope you guys you can hear me and you as well seeing my screen. I might be yapping here and maybe guys are not even here. Let me see on the chat section if you guys are following and if you can hear me, if you can see my screen and if you can hear me. Let me know before I go further. Perfect. So, you remember, guys, a very important thing that I want you to note. Every last week of the month, always try to avoid over trading because chances of you being stopped out is high because of the volatility. Now, the first week of the month, it could be the best week also to get some nice swings because once NFP data is out, and then also the monthly candlestick has closed. Now you're getting to a new month. So you need to dwell so much on if you had mapped or you marked your areas of interest on the swing timeframes like daily, weekly, and monthly. That is the time that you really need to be keen and wait for confirmation and take those trades. The problem with some traders is that they have fear. You cannot make money if you fear. It's better you hit that stop loss, but at least you followed the plan and took the trade. So it's very, very important to be keen, especially during this time of the month, because you could probably get some nice swings and also learn the aspect of waiting that you can get some good A plus or high probability setup. So on the daily time frame, we have these flip, which is at 31, 24, 25 level. Then if you go back to the monthly, you realize that that zone is on a week overlap. Understand? So that's what I was saying. The whole of this is a monthly. I mean, the whole of that area. I think I need to put it here. The whole of that area. It's a week for monthly. It's a week overlap for monthly. But if I go to the daily time frame, I can spot a nice flip at this particular area. If I turn it to the line graph, you can see these are very nice flip. Because initially when price was coming back, the market had taken out this low. The market took out this, first of all, it took out this high. That was liquidity being engineered. The market took out, sorry. Okay, the market took out, just a moment. The market took out that, yes, that high, and then price came and traded below this low. So we expected, when price was coming back, we expected probably a reaction at this area that will continue taking us back to the bearish side, all right? But what happened? The market, with a high momentum, we traded above that. So this becomes one of the best or powerful flip area that once the market comes back, if you do refinement, you're gonna get some nice buying. Some nice buys from this particular zone. If you go to, the lower time frames, like 4 hours, at that particular zone, you can see we have some sort of special type of liquidity. We have a structure that area. If you go to H1, or before you even go to H1, we have some sort of impure liquidity too, because this area you see this touch, the first touch, second, third, fourth, fifth, it's acting as impure liquidity. So there's a likelihood of once the market comes here, you might be getting some nice buys from here. If this zone fails, this is the next structure that you can consider to get your buys from. I'm talking about this. We also consider this at lower time frame refinement, and we also have this particular. This is where I'll consider mostly to take my buys. Now, we go to H1, the same area. You see, we have type 5, and also we have impure liquidity. So it makes it even more a better place to get buy. So consider 31.25 as a very nice zone to look for some nice buy. So I want to go back to the daily time frame and look at the structure from the upside and also explain to you what I'm seeing and what I'm anticipating. So the other week, if you remember very well from the other week, but one, I told you guys the moment you'll have a daily candlestick body closing below 32, I had posted that in the group, 32.83. That was a clear indication that we might continue selling further. Because if you look at what has been happening, we have an exhaustion. It's like sellers are trying to pull back for liquidation, especially to liquidate the monthly levels and daily levels before we continue with the bullish trend. So we had this on. Then when you're checking your charts on daily, you need to use 1 hour for time frame movement and coordination. So on the other, from the from the other side of price, we had this structure down here. We had this structure, this area. We had this structure down here, and you can put your line where we have the invalidation point. Then this is the validation point on this structure, and because it's also an area of liquidity, that's why the market came, tapped on it, and reacted. So I want us to focus on these two areas. Then I'll give you probable movements and actions or reactions about how gold will be heading to this moment. So if you look at this daily area of liquidity, if you go to 1 hour, you've got to get to understand that. Okay, let me change the colors to avoid confusion. So I have this area, and I'll have this one here. So that was a structure on daily. This happened a few hours before. I think this happened on Thursday. Yes, on Thursday, and then a few hours before NFP, we had price tapping on our impure area and dropped over 300 and something pips. So now, on these two green lines, it's my area of on these two green lines, it's my area of interest that I had before them. So if you go to 1 hour, you need to look at. I'm just showing you how you could have gotten these trades. Then I will talk about where we're heading to. There are a couple of things that you could look at. So of course we have our area here. Then before this market pushed up, we could clearly see that we had this particular shift point. Let me show you. We had this particular shift point. Then on that shift point, we had these this inside, rather this structure here, which was also creating some sort of impure liquidity, right? Then on the same, we had this liquidity engineering here, right? We had this liquidity engineering at this particular area. But if you look at the number of pips from that area to the downside, it's so big. But there's one thing I want you guys to understand. As much as we trade based on liquidity, I want you to get this to your head. It's very important. There are times, especially when you're trading high volatile pairs like NASDAQ, gold, US oil, US 30 and all that. It's very important. There are times you can get a very nice setup, but the stop loss is based on structure. Okay, when you talk of high volatile pairs, there's also this aspect of time frames. If let's say you're using the daily time frame, you should not go beyond. You should not go beyond when you're using high volatile pairs, you can go up to 3 time frames lower. But when you are trading low and medium volatile pairs, don't go past 2 time frames below your constant. Let's say if you're using daily, you have 4 hours and 1 hour. So make sure your entries refinement lies mostly on 1 hour. Because if you can't do that, chances of you missing trades will be so high. Someone is making noise. Guys, make sure you have your mic muted. Make sure you have your mic muted. Kevin, I'm going to give you a chance also to talk on a few other pairs. Don't worry. Let me just finish on gold. So if you look at what happened later on, gold came and reacted on this liquidity engineering. Let me make it to be black. Gold came and reacted on that liquidity engineering on 1 hour and pushed up. So if you look at, again, this area, sorry. So gold came and reacted on that particular area and then pushed up. So when you're on a daily time frame, the only way you can see some zones clearly, it's by, the only way you can see some zones clearly, it's by doing what? It's by going to its first situational time frame. So initially, we were looking for price to trade below this area to get confirmation for sales, and the price came to react on this structure or structure around here. Then we can see that reaction. But I expect probably we might be pushing down further. But before we move down further, price will always go for liquidity and so on and so forth. So I want to talk about something to do with impure liquidity so that guys understand how do you take entries, because I noticed that people don't understand this. How do you take entries based on the aspect of impure liquidities and what do you call it? And liquidity consumption. So if you look at, when I'm talking about impure liquidity, it's not something that is, okay. Okay, when I'm talking about impure liquidity, okay, Kevin, I've given you access. So when I'm talking about impure liquidity, it's not something that is added, it's all about support and resistance. So initially, before price went all the way to 32.04 price level, we had this particular zone where the market was reacting from. So you need to know how to align. Okay, first of all, on the daily time frame, we wanted to see candlestick closure, body closure below the 32, 80, it was around 32.83 or 84 there. Then after that happening, on the 1 hour, you could clearly see that we had this area whereby it was acting as support. Market came, first of all, it tapped in this area. So we call this a zero price level. Then there was this reaction, then this one. So when that was happening, you could see that the structure that was being created, the market came, took out these, did a shift here, created this high. Then if you look at the body candlestick, there's a likelihood we didn't have body closing above that. And then the market again came, reacted here, took out this high, but never took this one. And then later on again, the market came, tapped here. Then there was this high, but we didn't have any body candlestick closure above this. And then from that particular point, if you use our aspect of liquidity, here we have a lot of things. We have flips, and we have special types of liquidity. Like I can see we have type 3 here, and also we have type 5, and so on and so forth. Now, what happened? The market came on 1 hour, created this low. So this now becomes an area of liquidity for consideration if theirs will be strong, will still be stronger. So we might come and have a clear consumption down here, and then now we continue, even pushing all the way to the 3,000 levels or to the 31.20 something, 31.25 zone before we continue buying. Now, having said that, the rules of getting entries, especially when you're spotting an impure liquidity, or the ideas on how you can apply that. We are trading in a probable market. So no one is perfect. You cannot determine the outcome. Your work is to do the analysis, follow the plan, apply risk management, execute the trade. No one is going to be perfect when it comes to the market. So we have this here as our flip zone where we had the impure liquidities. So this simply means initially buyers were trying to do liquidity buildup. And then when the sellers got enough liquidity, the market with crazy momentum traded below that. So when the price comes, with the rules, when price comes, 90, based on experience, 95% or even up to 97, 98%, price has to react on that area that the market broke and give you some nice, oh my goodness, my Zoom has expired. Oh, I need to load some money in that card. I think I'll do that later on. I've seen a notification. Anyway, let me just proceed. I have 10 minutes before this meeting ends. Then I'll sort it. I'll pay for it later. I think that is expired. So price came and reacted on that particular point. If I extend my line here, you realize that price came and reacted on the week and delivered, I think, around pretty sure some 300 and something pips. Yes, 300 actually 400. Price delivered 429 pips, almost for that. And when it was coming down, it was going for any structure that we had. And if you look at it keenly, we had this structure here. We had this structure here, and also we had this special case flip. That's where price came and reacted, and it's now pushing up. So there are possibilities. This was the first reaction, which we call it the zero level. So if you use the fib tool or use if I measure these, other reaction that I'm expecting, on the 50% of this structure, we might have another reaction that can deliver up to 200 pips around here. And then maybe price will come and do full consumption up here. Then maybe we'll go down. So anything can happen. Price might come here, react and go, or it might come all to the extreme point, does our consumption and go down. Because of this particular area, we have a type 5 of liquidity right together. So if you look at what do you call it? If you look at 4 hours, we can't clearly see anything. We only have this structure. You go to 30 minutes, we have this structure, and we have this also inside structure, shift, and then we have these structures. But for me, I'm sticking on daily and 1 hour. So in terms of gold for now, I'm anticipating the market to we really have a body closure above these. Okay. I'm anticipating price to come, still do full consumption. I'm anticipating price to do full consumption. Maybe then we'll continue with a rally to the downside. That is if the bears will be stronger. Remember, today's on a Monday. The market just opened a few hours ago. So we might have slow moves, maybe before we have some nice momentum moves. Today being on a Monday, we only have 9:30, which is already done. We had CHF. Then later on, during the New York session, we have USDPY. So maybe it might have some little impact, not really that much. So that is what I have on gold. If I go back to my daily time frame, today's candlestick is bullish. The market opened around this area. This is where price opened today, around that particular point. So maybe market will still come down, do consumption of these sub intraday levels of liquidities, and then maybe push up. So we need to wait for a proper body candlestick closure above this structure, but this is also already a clue. But once we have any strong, even on 4 hours, body closure above this area, then that will be, because if I check on 4 hours, let me see. Yeah, on 4 hours, no serious body closure. So we might have, okay. Once we have a 4 hours candlestick closure above this, that's when now we'll be aiming for more buys and maybe target 200 to even 300 pips for today. Because once we have a proper one there, we'll wait for price to come and consume the intraday price levels like this one here. Where price came from, we have this structure down here. And maybe we'll be able to collect some good number of pips. Yeah, we can get up to 300 pips for today. All right. So that is on gold. That is on gold. Let me go to JPY very fast.
I wanted to ask something about those impure liquidities. You mark the wicks.
Pardon?
I wanted to ask something about those impure liquidities. You mark
Yes.
the wicks, you don't mark the bodies.
When it comes to the impure liquidities, when you're doing the alignment of where you're supposed to enter, you put your line on the wicks. You see, like here, let me show you. For example, in this scenario, these are the touches that we had. So you can align it in this manner, and at least have you can align it in this manner. Yes, this way. So like we have this touch, this one, and this. So you dwell so much on the wicks. Even if you could have had your, you just focus on this wick, you'll have a reaction. See, like last week, price came tapped on that and delivered 400 pips. Then you can always go down and refine now in terms of stop loss based on how we the principles that we follow when we're doing refinement. This one I could even go up to 1 minute. Let me show you and get a very nice stop loss. So this is like also more of a flip. So with this, I could have that and put my sell even up to. For me, sometimes gold I'm so adjustable. So if you have this, let me show you. If I used 1 minute and I put my, let me show you what happens. What do you see? The market tapped exactly, for some brokers, the market tapped exactly on that particular area. These brokers too. Like on XNES, there's an account I use for XNES. The market tapped on that price level and dropped. The market tapped on that price level and dropped. But you can still, it depends also with you, the aspect of stop loss, because if you had your entry there and you have a stop loss of up to 30 pips, you could be safe even 25. There's also the aspect of brokers, plays and all that. But I dwell so much on the wicks when it comes to pure liquidity, because this was the last low that was broken with crazy momentum. So it's like telling me the momentum of seller is so high. So when price comes, there's a likelihood of price not breaking above. So to react on that and continue selling, because now we know that sellers are dominating price. Okay, let me go to, I hope you answered, Mr. Kevin. EURJPY. Guys, if the meeting goes off, I need to sort this out later. If the meeting goes off, just you click on the link and rejoin back. Kevin, are you still there?
I'm still there.
Can I give you a chance to talk about EURJPY and maybe GJ?
Yeah, yes, of course.
Okay, go ahead and share your screen. Oh God, just a moment. The remaining minute time is 1 minute. So guys, let me do this. Let me end this meeting, and then all of us will rejoin afresh with the same link, and then Kevin will talk about the JPY because it's gonna end in the next one. Let me just stop it there, end it, and then you guys can rejoin back. Then later on after this, I'm going to pay for the Zoom because this one is, I think it has expired while we're here. It's a free version. So let me end it. All of you, the 19 of you, join back. Then we proceed.